A very good afternoon. Welcome to Halftime Report live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Vinny Motiwala. Well, it's turning out to be a day where we are definitely seeing a lot of pressure in the broader markets, you'd have to say. So the mid-cap index is down around 0.6%, but not that much for the small-cap index, interestingly, which is down around 0.3%. The advanced decline ratio now firmly on the declining side. So what took place today is that around 11 a.m. odd, we did see a little bit of a crisscross take place, and after that we've just seen a widening gap between the two. So the advances have really overtaken in terms of the declines have really overtaken as compared to the advancing stocks at this point. The frontliners also under pressure. So we have the Nifty, which is down around 95 odd points, the Sensex, which is down around 367 odd points. The other big pain point in today's trading session is definitely the banks, the financials, the bank Nifty itself, which is down around 0.7%. So that seems to be where the pressure is. As the day's gone along, we've seen the pressure build up for the markets, despite that recovery that we saw intraday after the start of trade. Hi, Vinny.
Hi, Ekta. Yes, absolutely. We're seeing some bit of that muted performance that's coming, at least for a Nifty Bank as of now, as well as the mid and small cap. But sectors which are not doing well today, let's look at that. Nifty Realty, that's among the top sectoral losers today. So keep an eye on that one. Other than that, Nifty IT, that's also under pressure. PSU banks, that's managing to hold on to gains. And Ekta also highlight a bit of few names that are moving in trade. But Premier Energies, Vari Energies, that's seeing a run up in today's trading session. Both are holding on to gains of almost 4% as of now. Keep an eye on that one. Himadri Specialty Chemicals, that's another one that's been buzzing in trade as well as Deepak Fertilizers. So these are some of the names that we're seeing moving around in trade. But which are these other stocks that are also moving and buzzing in trade today? We have Vivek joining in with us to take us through those buzzing stocks. Afternoon, Vivek.
Well, good afternoon. Like you mentioned, action-packed, but especially in the last half hour or so, we've seen quite a bit of selling pressure emerge as far as the broader end of the markets are concerned, ensuring that the advanced decline ratio is now firmly in the grip of the bears. Quite a few stocks in focus. Muthoot Finance, has cooled off a little bit from the day's highest point, but gold prices continue to surge high, and this particular stock has been an outperformer in the last couple of trading weeks. The other stock on our radar, one from the broader end of the markets, is Tata Investment Corporation. Very strong volumes today, higher by almost 11%. On the other hand, have a look at Minda Corporation as well. We've been highlighting post the analyst meet, very strong, ambitious commentary coming in from the management, higher by 8%. Indian Bank has cooled off a little bit, but continues to be among the top gainer as far as the NSE 500 index is concerned. And Godavari Power and its part today manages to hit a fresh 52-week high. On the other hand, a few sectors that we are focusing on that is contributing to the kind of selling pressure that we've seen in the market. The entire Realty pack, especially names or companies that are exposed to the Mumbai market, all of them down anywhere between 2.5% to 4%. Look at DLF, Oberoi, Godrej, all of these stocks under significant selling pressure today. And IT, remember, some fresh woes or fresh worries as far as H1B is concerned have emerged overnight. On the back of that, the whole host of especially mid-cap IT names continue to witness selling pressure. So no bounce seen as far as the IT pack is concerned.
Okay, thank you so much for that, Vivek. But let's move on. And I actually managed to interact with JP Morgan's pharma analyst, and this was on the sidelines of the 10th JP Morgan Annual India Conference. And we started by talking about, Trump, the threats that have come in terms of pharma pack, what is going to be the tariff situation there. And Bansi Desai, Vice President at JP Morgan for India Healthcare as well as pharma research, spoke to us about these implications as well as a lot more on the pharma and healthcare space. Listen in to a slice of that conversation.
If you first look about the pharma space, most of the pharma companies have diversified businesses in India, right? About 1/3 of their revenues come from domestic market, which is the India branded generic market. That's something which is insulated. That's the market where you have structural and stable growth. About another 1/3 is where these companies generate revenue from the US market. Now, US is the market where, potential tariffs could have implications. Very difficult to predict policies, to be honest, but our sense is that most of these companies are going to adapt and manage the implications through combination of strategic and operational responses. Companies with higher exposure to US obviously will be a lot more vulnerable than the ones who have lesser exposure. In our view, larger companies also probably will be better off in managing any potential disruption compared to smaller companies. A, because of the scale that they would have, and also B, because a lot of these leading pharma companies have manufacturing presence in the US. So maybe that can also help offset any of the potential tariff impact. But difficult to predict policy. If you look at US EU deal, the pharma deal, generics are largely exempted. If you look at US-Japan deal, generics are largely exempted. So it remains to be seen whether Indian generics, will see tariff or not, and if yes, what would be the magnitude. But fundamentally, Indian companies do play an important role. We account for almost 45 to 50% of US generic drugs prescribed in the US. So we are a very important part of their supply chain. So yes, I mean, it remains to be seen.
Remains to be seen, but any concern also comes in for CDMO players. Will it mean that maybe CDMO players may not get that much of a business, counting the downside risk, right? I'm just talking about the worst case scenario right now.
No, in fact, on the CDMO businesses, we believe they are a lot more insulated. The reason being the burden of tariffs actually lie on their clients and not on them directly. That's number one. The second is that if you look at the supplies of CDMO in terms of value terms, it hardly accounts for few percentage points of the large innovators' P&L. So even if tariffs were to be imposed, it's something that can be get absorbed by the innovators. So CDMO, in fact, I believe, in overall scheme of things, are relatively lot more resilient.
Pansi, let's talk about CDMO only, because I have heard CDMO since a year and a half. This is a space that's coming up a lot more, growing well. So in the CDMO space, every, I think, pharma company has some segment now that is CDMO, right? Where and what will we see the benefits coming in for CDMO players? Which players will see those benefits? Is everyone going to be benefiting? Is it the top line players who will benefit? Where?
So if you look at the CDMO industry versus a decade, we had only handful of companies present in the space. Today we have a lot of companies present with bunch of capabilities within the CRDMO segment itself. If you look at the global CRDMO market, this is over $200 billion in size. And India accounts for only 4% share today. So we are very small, in terms of our size and scale, but we are gradually inching up in terms of our capabilities. We are also fast emerging as one of the preferred players or partners, by large innovators. And there are multiple reasons for that. Number A, if you see, we see structural macro tailwinds in this space, which is rising outsourcing penetration. The second is diversification strategy by large innovators, EU +1, China +1. On top of that, you have US-China tensions, all of which is driving higher business for Indian companies. The second is Indian companies also offer cost advantages. We have cost-efficient manufacturing, our compliance and regulatory track record is strong. We have large pool of scientific capabilities as well. In fact, on labor cost, we are comparable or even better, to Chinese counterparts. So we do offer, these inherent advantages. Last but not the least, if you hear the commentaries of these CDMO companies, all of these guys are talking about expanding aggressively. So they are incurring huge capex. Capex for this particular year is going to be almost 30% of their existing gross blocks. So that's huge, and that drives revenue visibility, right? The second is they are moving up on the value chain as well. Traditionally, we've been known for strong small molecules. Our capabilities have been proven on that side. But gradually, we see companies doing a lot more complex work, like ADCs, which is advanced drug conjugates, oligonucleotide, peptides. Our capabilities are nascent here. We are not very big, but slowly and gradually, all of this is opening the target addressable market for Indian players. And we see this momentum reflected in companies' RFQ, which is request for quotation. We see them announcing increased capex guidance.
Okay, so definitely a lot more interest coming into Indian CDMOs. That's the word coming in from JP Morgan there. We need to take a short break on that note, but we'll get you a lot more in terms of markets and stocks on the other side. Stay tuned.
Welcome back to Halftime Report on CNBC-TV18. As of now, Nifty slight bit of an inch up from the day's lows, or at least the flat line where we're seeing slight bit of an uptick in the last few minutes we've seen coming in. Which are those gainers that we're seeing overall? Himadri Specialty is what I'd highlighted. Premier Energies also is managing to see some bit of a gain in the broader end of the market. But for the Nifty, HUL, LNT, that have seen a slight bit of a spike up as well in the last few minutes. So that is what we'll be keeping an eye out on. Now, in terms of top losers today that are coming for the Nifty 50, specifically we're seeing a fall coming in Tata Motors, Wipro, BEL, as well as Bajaj Auto. So Auto Pack today is clearly seeing some bit of a pressure because Hero MotoCorp was also something that is down almost 1.3% in today's trading session. Apart from that, let's look at what the Nifty Mid-Cap is also doing. Nifty Mid-Cap is also trading with cuts of almost 0.7% as of now. Slight bit of an uptick for the Nifty Mid-Cap from the day's lowest point. But what's happening in the world of FNO? What are the latest updates that we should be keeping an eye out on here? Nigel is joining in with us from the FNO desk. Afternoon, Nigel.
Well, afternoon, Vinny. The FNO market is looking extremely exciting right now. And let's get straight to the point with regard to what can lead the recovery from here on. The Nifty Bank, that's been the one that's been holding one end up. And it's at a very, very crucial juncture today. As we speak, there are no fresh shots getting to the system. In fact, there is some unwinding of positions post that big run that we saw on the Nifty Bank. But now the level that we have made today in terms of a low on the Nifty Bank is coinciding with the low that we made yesterday. So this is the extremely important mark, that 55,100 mark, that needs to get protected. If the Nifty Bank needs to bounce, it needs to bounce from around these levels. So, that's going to be the big mover for the remainder of the trading session as well. Moving to the options data, well, the call writers, they are feeling very, very confident. Just take a look at the kind of call writing we have seen. The 25,100 call, the premium has crashed out there. At the start of today, it was around 180 rupees. It's come down to around 130 rupees. As is the case with the 25,200 call as well. Take a look at the premium. At the start of today's trading session, it was at around 120 rupees. That's come down drastically. So keep an eye out on that. Call writers, they feel they're back in the game. On low levels of 25,000 put, it's seeing a mix of activity out there. Some writing, some buying as well for those that believe that the markets are actually going to go and correct from here on. So there is some action out there. Putting in the options data, putting in the technical levels, well, the 25,350 mark becomes extremely important on the upside. A couple of sessions ago, we entered around 25,331 and we did a U-turn from there. So this band is important in terms of a resistance mark. If the bulls can get past that level, then they'll feel a little bit confident. However, on the downside, you don't want this 25,000 mark to break because that's the crucial support, the technical support that you're looking at. Moving to stocks that are in focus today, you have DLF. There's fresh shorting seen out there. Big open interest built up, stock lower. But there is some buying on select counters as well. Indian Bank, after a while, the stock has come onto our list. You have the stock that's holding steady in a market that's actually a little bit jittery, in particularly the Nifty Bank. But there's some fresh long addition out there. And the other one is AB Capital as well. There's a mix actually out here of buying as well as short covering because that stock is holding in the green. And there is some kind of build up in terms of open interest. So key to track today. The Nifty Bank needs to bounce from around these levels. That's what will help the Nifty protect that 25,050 odd mark. Back to you guys.
Okay, Nigel, thanks very much for that. Slip below 25,000 as we speak. So 25,095 is where currently the Nifty is at, down around 0.3%. The mid-cap index is trending lower, so just watch out for the mid-caps. It's currently down around 0.6%. It's been a tad bit of a recovery that we've seen from the day's low, but nothing really to write home about. We're seeing a little bit of buying coming in at those dips, but let's see whether that sort of trend sustains or not. As of now, the Bank Nifty also showing a cut of over 300 odd points. But let's get some perspective in. Speaking at the US-India Strategic Partnership Forum, Commerce Minister Piyush Goyal spoke on increasing energy imports with the US and unlocking limitless possibilities with the US on various fronts beyond energy. Listen in to a couple of those bites.
The world recognizes that this is one area where we all have to put together. India is a big player in the energy field, as what Kriti just mentioned. We are big importers of energy from across the world, including from the US. We expect to increase our trade with the US on the energy products in the years to come. And be close friends, natural partners our energy security codes will have a very high element of US involvement, which will ensure price stability, which will ensure diversified sources of energy for India, and help us unlock limitless possibilities that the US on various fronts, energy and beyond.
Okay, interesting comments coming in there. But on that note, we're actually going to slip into a very short break. Don't go anywhere. We'll come back with more updates on the other side.
Welcome back, and joining us on the show now is Thomas Printer. He's MD and CEO at IGI. Mr. Printer, hi, thank you so much for joining in. Festival season and diamonds are doing well. And just as the consumers were getting some awareness into diamond certification, we have a slight confusion about the 4 Cs right now. Would love to take you through us. Thank you,
Manisha, for having me around. The 4 Cs have been the standard grading procedure for diamond grading. Okay, and we are not deviating from the 4 Cs. What has happened is, in recent times, lab-grown diamonds have gained momentum, especially in the US, where, almost 50% of the bridals have shifted to lab-grown diamonds. We believe that as an independent laboratory, we will continue to be transparent and ethical towards the consumer, which means that we will define both our diamonds, chemically, physically, crystallography, everything is identical, is the same. So we say we grade diamonds, we grade natural diamonds, and we also grade lab-grown diamonds. We adopt the 4 Cs, which has been a century-old nomenclature for the diamond grading procedures. What is more important is the origin. As a laboratory, we have to identify the origin correctly without any deviation. So we say that we are able to identify the natural diamond. We have all the equipment and the expertise and the scalability to identify the natural diamonds as well as the lab-grown diamonds, and give the consumer the option. Because natural diamonds is extremely rare, beautiful, gift of nature, and it's also very expensive. On the lab-grown front, lab-grown diamond is a more affordable luxury. So what is happening is, the millennials and the Gen Zs who are starting off in life, they prefer to opt for an affordable luxury like the lab-grown diamonds, and they go in. So the consumers, the new consumers which are being brought into the fold is tremendous. So we are in the,
So, Mr. Printer, you are saying that you're not moving away from 4 Cs, whether it is natural or lab-grown. It's the same certificate that goes across. It's on consumers to choose.
Yes, it is for the consumer to choose. We are an independent laboratory. So we want to give transparency and full identification of the diamond and let the consumer take the choice.
Mr. Printer, there's a lot of lab-grown diamond. There are the natural diamond companies also now venturing into lab-growns as well. And we're looking at single stores actually expanding, exploding, if I can use that word as well. For the Indian market, we do understand on what US is doing. Europe seems to be doing well as well. Dubai, we've seen numbers increase too. When you look at the Indian markets, what is the kind of growth that you're looking at in lab-growns for the India?
Okay. For instance, I would say 80% of all lab-growns are grown, polished, cut, and certified by IGI in India. Okay. While the main market is in the US, there are other geographies which are also gaining ground, including India. India is fast gaining on the lab-grown front. What is happening is lab-grown jewelry is becoming more and more affordable. It is going into the 2nd and the 3rd tier cities, more and more consumers. So our purpose today is to not only identify the origin, give it the 4 Cs, and also educate the consumers that both are diamonds. Currently, there is quite a bit of negative chatter on the lab grows, but we are away from that. We say we grade diamonds. We will give you the grading on the natural front. We will give you the grading on the lab-grown front. And we are an independent body. You need third-party certification. Anybody can say my diamond is the best, but as an independent body, you need an independent body accreditation. And we are also accredited by ISO 17025, which is an extremely stringent lab accreditation following all the technical and the process compliances, so that we keep our standards intact. And that is very important in today's date.
Mr. Printer, there have been, I can resonate with that a lot of time you take these certificates home and those cards home and they get lost. But what you also have done is with digital diamond certification, I think the need of the hour and quite a technical move, I would say.
Yes, absolutely. See, blockchain has been a buzzword. Now we have created that blockchain into a reality. See, everyone wants the provenance of a diamond in the entire supply chain. And that is what we have offered to the world first time, so that, and digitization is a must. We have to harness the technical technology rather, and let it proliferate, because everything is going digital. We are into the AI mode. We are doing heavy research into AI. AI is just not a word that we use loosely. We have implemented the AI in various processes so that our process becomes more and more efficient. See, today, efficiency is king. Reducing the time is value, money value.
Absolutely.
So we are in the process of doing both these things so that we give an affordable, viable solution to the consumer for our various channels.
Mr. Printer, while there's a lot of chatter around as well on how India, because of the higher gold prices, seems to be moving towards 18 and 14 and 9 carats as well. But I was recently talking to BIS, which is the hallmarking agency, and they said 80 to 85% of jewelry that has come to them is still 22 carats. So that perhaps tells you on where the narrative lies. And that's exactly with you as well. So would love to know on what kind of festival feedback or on-ground sense are you getting this time around? Is it higher caratages, lower, natural, lab-growns? What is it that you see processed through?
Manisha, you have to understand that India is a conservative society, okay? And we are in for natural. We are in for pure gold. So our gold jewelry will remain at 22 for some time. The new consumers might get into 14 karat or 9 karat even, I don't know. However, the bulk of the Indian society will remain with 21, 22 carats. And maybe in jewelry, it is 18 karat. Okay. And we do the BIS for each and every jewelry piece that we do. Certified. You understand? What is happening rather is lightweight gold jewelry. So there are special machines which create a lightweight model of the same. So, when the jewelry piece looks the same, it can actually weigh 40% less. And that way, you can have the same jewelry, you can have the same gold standards, and at the same time be more affordable.
Mr. Printer, so as I asked you, what caratages are you doing more right now? So we get a sense on where this festival is looking at like.
At this festival, nothing has changed.
Okay.
Thing is in the same order, only we are inundated with jewelry pieces.
Okay.
The market in India is very vibrant, is very bullish, and consumers want their jewelry during Diwali and Dussehra and Navratri and all these things.
Mr. Printer, while of course certification is not just, it's not, a choice anymore, it's mandatory. Would you say it's a compulsion as well right now? Because there still are pieces that are sold with or without certification. What would you tell consumers about that?
as long as a consumer wants peace of mind, get it IGI certified. As simple as that.
Mr. Printer, thank you so much for joining in. Well, that's about the jewelry business, really. We'll be looking at higher demand. There's more diamonds being bought this time around, especially with gold prices so high. So diamond perhaps becomes a choice at this point. And as he said, there's more affordability right now, especially with lab-growns as well, and so much choice when it comes to natural diamonds as well. Thank you, Mr. Printer, for joining in. And with that, it's all the time that we have on this segment. Stay tuned for more news and updates on the other side.
Thanks, Manisha, for that. So yes, absolutely, lab-grown diamonds is where probably the market is moving at this point in time, considering what is taking place with gold. But nonetheless, thanks for joining in and giving us sort of that perspective. Well, back to the equity markets. It's not glittering like gold is at this point in time. So the mid-cap index is currently down around 0.5%. It's recovered from the day's low nonetheless. We do have Upasana with us. She's tracking a particular stock which is in focus, Bajaj Electricals. Upasana, tell us more about it. Why is it up and about today?
While the board of the company has given its consent to acquire Murphy Richards' brine rights in India and neighbouring regions from Glen Electric Limited for a consideration of nearly about 146 crores. Now, mind you that the company is associated with the brand Murphy Richards since April 2002 through a licensing agreement for an exclusive marketing and distribution rights in India. Now, company also positions this British brand Murphy Richards in the premium category with products in various sectors such as kitchen, home appliances and even personal grooming, which the company believes has a wider appeal and sales growth as compared to the other categories. Now, this strategic move is expected to strengthen the company's position in home appliances and consumer electronics portfolio. Hence, we can certainly see the stock surging in trade today because with this acquisition, company will secure outright brand rights in India, Nepal, Bhutan, Bangladesh, Maldives and Sri Lanka, that is overall the South Asia market.
Okay, Upasana, thank you so much for that. Bajaj Electricals as of now is managing to hold on to 7-8% of gains coming in. But some of these other names also that we should be keeping an eye out on and that are trading almost at the 52-week high, Tata Investment Corp. That's the one that's buzzing in trade. 9-10% of gains that we're seeing coming in today. So keep an eye out on that one. We have Indian Bank. That is also trading at a 52-week high, as well as Canara Bank managing to hold on to gains of 1-2% in today's trading session and trading at a 52-week high. A lot of moves that we're seeing coming in, especially from these Adani Group names on the flip side, but keep an eye out on that. But let's go across now to Shireen Bhan at the CII National Council meeting for CNBC-TV18's Mega CEO poll. Over to you, Shireen.
Gentlemen, welcome to the CNBC-TV18 Mega CEO Centimeter. I'm Shireen Bhan and we're coming to you live from the CII National Conference here in Chennai. And of course, this is an engine of growth for India. And we are going to be talking about what next now to drive reforms and to drive growth for India. Before I get my audience and the CEOs present here, this is one of the largest platforms that you will see. Almost 80 CEOs present here under one platform, live right on CNBC-TV18. Before we get the Q&A started, I decided that this was a good opportunity, since we have everybody here in the room, to actually do a dipstick survey and sense and gauge the mood of the nation, to gauge the mood of India Inc. So without further ado, let's get started. My first question, and this will of course result in a show of hands from each one of you, so I would request you to raise your hands depending on which way you decide to vote. With the GST boost coming in, the chief economic advisor suggests that growth will be higher, perhaps closer to the upper end of the band that was presented in the economic survey, which was 6.8%. What is your growth expectation for FY26? Ladies and gentlemen, option 1, 6.5%, option 2, 6.8 to 7%, and option 3, more than 7%. Those of you who think that growth is going to be 6.5%, please raise your hands. Okay, no hands here on 6.5%, between 6.8 and 7%. Okay, quite a few. And those who believe that it is likely to be higher than 7%? Okay, so that's the mood of the House. Just what the chief economic advisor told us, 6.8 to 7%, a little better than the economic survey's estimates. That's the mood as far as industry is concerned. The second question, and again, I'd appreciate a vote, a show of hands here. Do you see inflation easing further, and do you expect the RBI to cut interest rates again? Yes or no? Very, very simple. Those who believe the RBI will cut rates, a show of hands, please. So most people in this room do believe that the Reserve Bank is going to cut rates. And the third question to kick things off here, we've seen what's happening as far as the currency volatility is concerned. Do you expect the rupee to end, option number one, in the current band, which is between 88 and 89, to be stronger, which is below 88, or weaker above 89? Those who believe that the rupee is likely to trend in the current band, if you could raise your hands, please. Okay, and those who believe that it's expected to be stronger, that is above 88, just about 2 hands in the room, and those who expect it to be weaker, that's below 89. So majority expect the rupee to be in the band between 88 and 89. So let's get straight off. Rajiv Mani, I'll come to you to start with. What was your vote, 6.5 to 6.8 or 6.8 to 7%?
No, 6.8 to 7%.
Okay, and you believe the GST is going to help drive that number?
Yeah, I think GST will definitely help. I think firstly, the first quarter GDP growth was also was a very positive surprise, and from what we are seeing with the monsoons and the uptake because of GST on the consumption, just some of the early sentiment that we are seeing. We haven't seen the numbers as yet. I think 6.8 to 7% should be achievable. We are also seeing, if you look at steel, if you look at cement, the broader trend on the construction sector, which contributes a lot, that's very positive. We just saw yesterday mining sector is starting to show very positive growth. So I would say overall, 6.8 to 7% is probably a safe number to go with right now. I think India's bigger challenge is not the real GDP growth. I think it's the nominal GDP growth.
Yeah.
Because from a tax revenue collection, from a fiscal deficit number, I think that becomes more relevant. I think that's where we'll have to see if inflation continues to stay as benign as it is, and with GST it may come down a little bit, currency stabilizes, then the likelihood is that the nominal GDP growth will be a challenge. So we're hoping that if RBI was to reduce the interest rates, in some ways, push for greater growth, and then if that has a mild impact on inflation and it comes to closer to 2 to 3% in that range, if it ends in that range, then hopefully the nominal GDP growth number should catch up.
Mr. Mukundan, what did you vote when I asked whether interest rates are likely to be cut or not? Do you expect the Reserve Bank and the MPC to deliver on another rate cut?
I took a safe one. I actually voted with the president.
Which way did the president vote on that? You were looking at him. So yes or no on a rate cut?
Yeah, we do believe, I think there'll be I think we are in an era of, I think, a continuous rate being eased, because I think the inflation trends are down, and the long-term trends on inflation are also pointing towards going to be, and with hopefully we are seeing the peak of the tensions, trade tensions. We are the peak in the sense that it may last 90 days or 100 days, but I think post that again, I think the trend will be easing it down. So all directions are in the same direction. Clearly, I think we are in a very good spot in many ways. If interest rates are going to be benign or coming down, and our many things which government has done, including if you look at what they've done in power sector, what they've done in the roads, the logistics, all every aspect is now in place. So our own expectation is this is a time when we need to be positive. I think industry is a bit cautious because of all the tension around, but I think once that eases, you're going to see a massive push going forward. That's really the way
The question is, what is the timeline for that massive push going to be? But I'll come back to you in just a second on that issue. So industry expects rates to be cut, or at least hopes that the RBI will deliver with another rate cut. And the consensus in this room of a large number of India CEOs is that growth is likely to be between 6.8 to 7%. I should have polled a question on gold as well, Mr. Mr. Muthoot, let me come to you. Gold prices at record highs. I mean, you're talking about peaking as far as trade tensions are concerned. Any signs of peaking on gold prices?
Gold has been always lucky with Trump, and Trumpism is driving gold. And the uncertainty in the global economy is driving gold prices. I think now the new gold is silver, with silver going to be the next driver of investment for the common man, because gold now has become unaffordable.
Gold has become unaffordable. Yes, I would imagine consumers will agree with that. But do you expect the rally to continue?
I could say that 40% of the Indians have become wealthier now, with the gold prices moving up 40%.
That certainly is the case. But do you expect prices to continue to edge higher from here? And what's the expectation on silver?
Silver would be around 45 is what market outlook, and gold would be somewhere at 3,800 per ounce.
3,800 per ounce. So the rally is likely to continue. Mr. Trump has been good for gold prices. Roshni Nadar certainly not been good as far as the IT sector is concerned. So let me come to you now, because the issue that has captured headlines has been what's happened as far as the H-1B visa issue is concerned. While we have seen some sort of a pullback, there have been clarifications issued by the White House that it comes into effect only from the next lottery year, that is 2026. It doesn't apply to renewals. But now they're changing the lottery system. In itself is what the expectation is and what the proposal is. Roshni, to start with, the impact on Indian IT on account of H-1B, not just in the near term, but in the medium to long term.
So, Shireen, I actually think that, I'd mentioned this before as well, that we can't let this, never miss a good crisis. And if at all, if you've seen the trend of H-1B visa applications over, let's say, even the last decade, India's the largest proportion, but the number has been coming down.
Yeah.
And a lot of conversations today that you have with your clients, and we're all pretty heavily indexed on the US, is around AI adoption and AI-led deals. And there is a certain non-linearity in a lot of deal constructs in the way the entire sector is having to reimagine itself and restructure itself and reorganize itself. So, I think the pain is much more short-term and medium-term, but this is not just a problem for the industry. It is also a problem for customers, clients, and actually some of the most biggest companies which are hit by this are actually American companies.
Yes.
So one will have to navigate this. I think that it would probably drive those many more actual decisions on AI-led conversations and AI-led deals. And those are non-linear in nature anyways.
Yeah, so. Roshni, you're right in pointing out that this is going to impact US big tech far more than it will impact Indian IT, because the proportion of H-1B visas has been higher on the US big tech side, and India has been seeing a decline over the last few years, in fact, down over 30% in the last few years. But in the near term, as you said, in the near term, there will be pain. Do you expect a repricing of contracts? Do you expect that between clients as well as IT companies, there will be an absorption of the higher costs?
I'm not sure, Shireen. I think it's only been 2 days, and that was Saturday and Sunday.
Yes.
And I think, and today is, of course, yesterday has already showed that there will be some difference in changes in, the way they're going to actually structure the new plan for H-1B and looking at highly skilled. Perhaps there will be, again, in the short term, but it could also drive more outsourcing, which then again goes back to a very different sort of pricing model.
But do you worry about the fact that now that the first salvo in a way has been signaled on services, because so far the battle has really been on the goods front, now with services getting into the fray on the outsourcing front as well, while there's a long way to go for the higher bill to become an act, to become legislation, that this really opens up a new front between India and the US as far as our trade relations are concerned?
Maybe, but I also think that it's impacting different companies very differently, and I think business mix makes a huge difference. At least for us, in the last 6 years, we've invested more than $3 billion in IP. And that itself is non-linear in nature, and we have a huge investment and business line in software. So I think that business models are changing, and we just have to adapt.
Well, speaking of business models adapting, let me take the H-1B conversation forward, because Shashwat Goenka, as part of the group, you also have First Source, and I know that you've been hiring locally in the US, so perhaps less vulnerable to the changes. But as a company and as an industry, how prepared is India to move to product and platform, and whether this is in fact going to be the opportunity that this crisis presents?
I think definitely. And earlier today, we heard that an opportunity is only worth its weight in gold if you take that opportunity. And I think it's for us as Indians to take that opportunity. And I think for us as First Source specifically, we're not very impacted with H-1B, as you mentioned. But I think with this, there will be a rethink on the industry, and the push towards AI, which is what all of us have already been building towards, will probably translate to it much faster.
Move towards AI much faster. I'll come to Vivek Raghavan, the AI man on the table, in just a second. Sarvam AI, Vivek, I'll come to you in a second. But Satish Reddy, let's come to you. H-1B, this was the sword that was hanging, and now it's out there in the open. On pharma, we still don't know. President Trump keeps threatening that something's coming, but we still don't know when, and we still don't know what. How ready is the Indian pharma sector for the possibility of higher tariffs?
I mean, like you said, we don't know, right? So we still hope it won't be anything which is punishing, because, again, if you see the outcomes, Indian exports to the US in pharmaceuticals is largely generics, and that goes to the people. So when it comes to the payers, finally, it's mainly the government, and also it's the common people who will be hurt the most. Right, so we certainly hope it won't happen, but even if it were to happen, I think it has to be an issue of, who will be able to absorb the additional tariffs, which we assume will be low, right? So between the distribution chain...
When you say low, what is the expectation or the assumption that you're working with?
Oh, there's no assumption, but we just expect it to be low because of the reason that I said. It's going to have a deep impact in terms of, the cost to the governments as well as to people. So we hope it won't be high. But at that point of time, then the question comes, how much of will it be absorbed by the distribution chain and also by the company? That's something we have to watch out for. But all of us hope the best case prevails, which is no tariffs.
But yes, of course, that would be the best case. What's the expectation? And that's another question that I'm polling here. What is the expectation on the India-US BTA being done? Those of you who believe that we are going to see the India-US BTA conclude, the expectation, the hope, the assumption was that by fall this year. Those of you who believe that it will be done by fall this year, by November, which was the timeline estimated, do raise your hands. And those who believe that it will perhaps spill over into next year, raise your hands. So those who believe it will be done by this year, the India-US bilateral trade agreement, if you can raise your hands, please. Okay, a fair number. Those who believe that it's likely to slip into the next year, next financial year or next calendar year, well, there's more who believe that it'll probably get done this year, so that's certainly good news. Janmejay Sinha, you just did a presentation on why you believe that American exceptionalism is over, and you believe that this is going to be an opportunity for India. What's the best case? What do you believe India needs to deliver on to ensure that we leverage on this?
See, the basis of American exceptionalism was limitless risk-free capital, talent, and R&D. All of those become available. So India needs to, of the $27 trillion of risk-free capital floating around in the US, even if we target 100 billion, which is nothing, but 100 billion, even if we create 9 centers of advanced learning or whatever, with 1,000 crores each, then we can attract and get these H-1Bs and students to land. And if we, instead of having R&D at 0.56, move it to even 1% of GDP, then we are already on that way, I mean, in the sense that it is tragic that an opportunity of this magnitude, of this size, if we don't capture it, then we can sit here and in 10 years from now say, India misses opportunities. And to blame, it will not be the government.
Yeah.
It will be everyone sitting in this room. So everyone should look inside and say, I am a loser. Fine, then India will be a loser.
So to borrow from John F. Kennedy, ask not what your government or your country can do for you, ask what you can do for your country. Let's throw this open. What is the number one thing that India Inc. needs to do to leverage on the opportunity?
Get talent. Everyone in this room should be trying to hire 50 people from the US. And I don't think they've got the plan.
Does anybody here have the plan to bring back those who are dealing with the uncertainty of H-1B to India? Anyone here who wants to take up Janmejay Sinha's challenge? Shobna, go ahead.
I want to be proven wrong, Shobna. I want to be proven wrong.
No, I go with Roshni that says it's just been the weekend and this thing is still evolving. But I think it has been part of today's conversation that we look at it as an opportunity and we understand that there's enough talent. And many of these companies are looking for such talent. As we transition into AI, we know that there'll be the best of healthcare. So for us, it's an opportunity. But the second opportunity I see for us is when it becomes tougher for the rest of the world to go to the US, India becomes a really good place. Like the Proton we have here in Tamil Nadu is the only one in Asia, and people can come from all over. So I think every one of us should introspect at this time to see how we can make this crisis work for us.
Roshni?
So, I mean, Shireen, just from our experience over the last 25 years of, at least investing in educational institutions for the country. But, I think it's time to also retrospect and question that why did that talent leave in the first place? And was it that they were just looking for better opportunities and jobs, but it was also the ecosystem? And if you have to create the ecosystem in the country, and at the risk of sounding repetitive, because I've said this before as well, innovation and R&D plays a huge role, and also the patent ecosystem. And it's absolutely critical that for a lot of this talent, which is unable to go now to the US or is considering coming back for all these reasons, and could be other reasons as well, to continue to invest in building institutions, continue to invest in building R&D and research, and across various fields, right? I mean, I was mentioning to the Foreign Secretary earlier that sovereign technology. Each country is looking at building its own sovereign technology, whether it's in semiconductor, whether it's going to be in AI, whether it's going to be in quantum. They're actually going to be extremely exciting areas for people to come back and work in and do research in. And then, of course, Tamil Nadu wants to take even leadership in space tech. So there are very interesting opportunities, but people want to harness also the investment.
Yeah.
And that's going to be absolutely critical.
So